Noriko Kuroki, Client Portfolio Manager, Emerging Markets Equity Team at JPMorgan Asset Management. She joins us to give us her view on the emerging market space and what the way forward could be. Noriko, hi, good morning, and thank you for joining us. If you could just give us your assessment of how emerging markets will pan out in the second half of the year, considering that there's been a stark outperformance of emerging markets versus developed markets in the first half.
Yes, it's encouraging to see emerging markets are performing despite some negative news flows this year. And we think that there are a couple of reasons behind this. One is valuation. Emerging markets underperformed developed markets for the last couple of years, and consequently, valuation of emerging markets became attractive, not just against its own history, but also against developed markets. So sometimes, in the absence of any structural problems, cheap valuation on its own can act as a catalyst. The other positive is that we've seen currency stabilizing and more supportive growth backdrop in the global economies, starting to filter through to emerging market exports, and that this should broaden into the domestic economies going forward. And the market is always forward-looking, so the market is starting to reflect this positive backdrop, I think.
Okay, Noriko, the Indian headline indices itself has given, what, a 35% jump year to date. Do you think at this point in time you will want to step in, or do you think this market will give you cheaper levels at all?
For India, we like the long-term story, and India's growth rate halved at the trough, but it's clearly recovering. And also the reform story in the midterm is very positive. But having said that, in the short term, we think that we need to be cautious on the valuation. It looks fully valued when it comes to kind of more tactical positioning. So we look to add perhaps more when we see some adjustment in the valuation. So we like the story in the long term, but tactically we are a bit more cautious from the valuation point of view.
I know you track the currency space closely as well, Noriko. What have you made of the move that we've seen in the yen? I mean, the huge slip over there. Do you expect to see more pressure on the yen? Because it does benefit a lot of companies, that have direct and indirect imports from Japan.
Yeah, I think there is sort of, I wouldn't say speculation, but expectations that BOJ will be easing at some stage. And then given that Fed is gradually moving towards the exit from the QE, and market looking into the possible timing of the rate hike, it's natural to expect some pressure on yen.
Well, to get back, Noriko, to the India story, you point out, of course, that Indian valuations are at this point in time perhaps either fully valued or even rich. But clearly there are beleaguered valuations in the infrastructure space, in the metal space, in the industrial space. Is there any space at all that you will be interested in, even at current levels?
We will be more stock selective rather than just buying on the themes. So infrastructure or materials, these sectors in the long run, the earnings stream will be dependent on the execution of the various reform initiatives. So we need to look out for the milestones for the implementation of the reform initiatives. But we think that Indian companies offer very interesting opportunities. There are lots of very high quality management teams out there. So yes, from the bottom-up stock selection point of view, there's no shortage of the kind of companies that we want to invest in. It's a question of at what price.
Okay. So between India and China, or rather in the entire emerging market basket, what is your pecking order now?
Right. Tactically, we think that China looks attractive. Yes, China is rebalancing and China is slowing, and there are lots of challenges. But when you look at valuation, China's valuation looks very attractive relative to the overall EM and also relative to its own history. Now, we are not talking about China going back to 2007 type valuations, but given where the valuation currently is and expectations are, we think that there are selective, interesting investment opportunities in China. So a bit of a contrast to India. India is clearly rebounding. Investors are buying into that. China, I think investors are still very cautious.
Okay.
You need to be a bit contrarian, yeah.
Okay. Well, is it that China is tops and India second? I mean, as my colleague was asking you, what is the entire pecking order in the emerging markets?
Okay, right. Sure, okay. And we think markets like Korea looks interesting as well. It hasn't performed that well this year, but there are some strong franchises that would benefit from the global economic recovery in Korea. So the kind of global players based in Korea, that looks interesting. In other parts of the world, EMEA region looks very cheap, and then of course in the short term, the geopolitical concerns might weigh on valuations, but markets like Russia, where dividend yield is higher than price to earnings, we see selective opportunities. Of course, we need to watch out for the further developments in the region, but they offer very interesting valuation opportunities.
Okay, then two final quick questions, Noriko. One, we have seen crude drop to $100, and some experts we spoke to thought that the average from now to end of 2014 could be even lower. So does that give you a little more reason to buy India, which is so terribly dependent on imported crude? And secondly, if you had $100, what would be the sectoral split? Would financials get the lion's share, and within financials, would it be private banks? Just some color on how do you stock pick in India?
Okay, firstly, yes, the oil prices are always a short-term risk to India, so lower oil price is clearly positive because that's going to ease the concerns on inflation as well, and that would also help reduce the deficits for the government. So yeah, we like that. And secondly, in terms of sector or the kind of areas that we want to look into, yes, private sector, private banks in India, we very much like that story because we see it as a very long-term secular growth story. They generate very high returns, and they've been very good at maintaining those returns. And we've been following these banks for many years, and we have high respect for the quality of the management we see there. The domestic consumption area, we want to see perhaps a better valuation entry point, but clearly, domestic consumption is a huge growth area for India. So again, more, I think, opportunistic, stock specific, but consumer discretionary is perhaps another area that we are positive.
All right, Noriko, it was a pleasure speaking with you. Thank you very much for perhaps bringing in some caution into the Indian market scene, which has been running away. But Indian markets actually today continuing to hold on to the gains that they made, 1/3% higher. Surely there are a lot of trading ideas out there.